Money FM 89.3, the best of the afternoon update.
Money FM 89.3. Today, we're talking about a sector that affects us all, insurance. More specifically, how insurers are navigating a changing investment landscape to ensure long-term stability and growth. According to market intelligence, Singapore's insurance industry is a significant and growing sector, with both life and general insurance playing important roles. And the market is projected to reach a size of $53.11 billion in 2025. As the industry navigates economic uncertainties, technological advancements, and shifting regulatory environments, insurers are rethinking their investment strategies to balance risk, returns, and long-term stability. Insurance companies do play a critical role in financial markets, so how are industry players positioning for the future? Well, I have just the right person to tell us more. David Chua, Chief Investment Officer of Income Insurance, joins me live in the studio to shed light on the latest trends and what they mean for the industry and policyholders as well. Welcome to the show, David.
Hi, good afternoon, Lindley. Thank you for having me here.
Great to have you here. Now, let's start with a broad overview of the current landscape. The insurance industry has traditionally been known for its conservative investment approach, favoring bonds, fixed income, and long-term stability. Has there been a change in recent years?
Well, I think wherever you look, things seem to have changed. Lots of things that has been happening. I think as an insurer company, as an insurance, when we think about the investing landscape, we do see a couple of new things that has developed. Firstly, I think the regulatory regime has shifted quite dramatically. Within the industry, we have seen the risk capital regime change in the last couple of years and across Asia. The second trend that we are also seeing is, in fact, the investment shift towards more passive, particularly low-cost ETFs as part of the investment portfolio. And finally, I would say the journey towards sustainability that continues on despite all the noise that we're hearing.
Okay, we'll talk more about that in a bit. Sounds like there are a number of changes in the investment landscape in recent years, particularly with the global economic volatility, inflationary pressures, and shifting market dynamics. From your perspective, how are insurers like Income Insurance adapting to these changes in terms of investment strategies?
So one of the things that has changed quite dramatically compared to the past few decades has been the rise in interest rates. Even as we speak, interest rate continues to be high, and that, as an insurance company, as you pointed out, with easily 60, if not 70% of our portfolio in fixed income alone, that has a dramatic effect. From the past of perhaps seeking returns during low interest rate environment in riskier assets, I would say we are perhaps starting to see evaluation of the portfolio allocation, how we can actually tap on the fixed income market, credits, in order to generate the kind of returns that our policyholders expect. So that's one aspect that has shifted. Across credit, whether is it on the public or the fixed income bond space, as well as in the private credit, direct lending space, those are opportunity sets that we have constantly began to evaluate over the past few years. I would also then just add the other trend and opportunity we are tapping on is also in the private markets. That has come up quite significantly, where in the past it may have been a little bit more esoteric in terms of how you assess it. I think we have seen a proliferation, right, in terms of the strategies that's available. Again, a function of the retracement of the lending that we're seeing in the financial space.
David, what about technology? I'm pretty sure there are insurers investing in digital platforms, AI-driven underwriting and solutions. Could you talk more around those things?
Sure. I think on the digital front, we are starting to see the last few years where there's been a lot of capital chasing opportunities within AI, in particular the Magnificent Seven rally. But I would just maybe caution to say that as an insurance company, we do look at investments over a very, very long term. What the past have taught us is the first movers might not always be the best beneficiaries of any new technology. We are looking at the space very closely, finding opportunities. But for an asset owner who looks to work with the fund managers we work with, I think it's then about how do we best tap on these opportunities while being very mindful of the risks in some of these sectors as valuations gets more stretched, and some of these sectors are becoming increasingly more concentrated, particularly in the US markets.
Okay. David, you mentioned sustainability a bit earlier, and it's becoming a hot topic, not only in investments, but also in how businesses operate. How has the trend towards sustainable investing impacted the way insurers balance risk and return in their portfolios?
Yeah, so, one of the things that I have to say when I first started in my investment journey, nobody talks about sustainability. But today, I think that's top of mind for everyone. At Income Insurance, we remain committed towards our role as an asset owner in the journey towards decarbonization pathway. And I would say maybe the last couple of years, what has changed has been a shift away from reducing our finance emissions towards more of how do we finance reduction of emissions, in particular within our portfolio. So the way we think about sustainability would be not just on the investment opportunities in areas such as renewables, infrastructure investments, and so on, but also how do we better navigate the environment, right? If we look at sustainability risk as a form of risk mitigation, and I think that's how we are consciously thinking about building more resilience within our insurance funds.
Okay, I want to go back to that point you made about rising interest rates. Looking at the broader investment trends, what's your take on how interest rates rising globally have affected the insurance sector's investment decisions here in Singapore?
Well, I think for one, it has definitely raised the cost of capital. It has also resulted in investors, including insurance companies, looking at cash. How do we better optimize cash? It's very different when cash use were giving you close to zero versus something close to 3. That has become a lot more important as an asset class. So I think as we think about the options and the opportunity cost of taking on additional risk, it just means that some of these riskier assets that we have discussed, they need to clear a much higher hurdle and a threshold before it becomes an attractive return. Case in point, I would say maybe in the past, if we look at real estate as an example, right, single digit like 5-6% would have been very attractive. But today, where there are other alternatives around, such as a corporate bond yielding you 4-5%, then the return hurdle therefore has to be adjusted in how we think about allocating our capital.
Great point and makes perfect sense. But let's bring this closer to home for policyholders. As a policyholder, if I'm listening in right now, what does all of this mean for me and my insurance policy? Should I be concerned about how these investment trends are affecting insurers' ability to meet their promises to their policyholders?
That's a great point. I would say Income Insurance, we've been around for 55 years, and we have continuously provided insurance protection and cover for our policyholders. Despite, your global financial crisis, Asia financial crisis, we have seen that and we have done that, right? Successfully navigated it. I would say, the way that we really think about the world now is how do we future-proof our insurance funds to make sure that we continue to be able to deliver towards the expectations of our policyholders in terms of returns. And this is where we do take a bit of a scenario-based approach when we think about the world. It's now no longer about optimizing for the best return risk, but rather how do we make sure where, in different high growth, low growth environment, high inflation, low inflation environment, we are able to continue to deliver the kind of returns towards the policyholders.
So what are some of the considerations, if I may probe further?
I think when we think about the last 20 years, right, we have been in a low inflation and perhaps a low to medium high growth environment, low to medium. Moving forward, where the inflationary outlook becomes a lot more uncertain and the impact of tariffs perhaps bring down growth than what we have been used to, I think it becomes very real as to how do we continue to evolve our investment strategies to make sure that even in a high inflationary, low growth environment, our investments are able to deliver the kind of returns. And this is where, I think back to your earlier question, this is where we see fixed income playing a very important part to be able to deliver the kind of stable income and portfolio diversification for our returns.
That's reassuring. Are there specific product trends that customers should be aware of? For instance, are insurers moving towards more, like you mentioned, maybe market-linked policies?
Yes, we have seen that. And I think the LIA, the Life Insurance Association statistics have shown that the unit-linked business has grown quite tremendously over the last couple of years. Now, what I do see is there's a great convergence among many of the financial institutions, including insurance companies, converging into that space of wealth management and wealth advisory. This is also where, for us as Income Insurance, we work very closely with our financial advisors to make sure that we are able to equip them with the right market knowledge as well as the financial tools and solutions to meet the expectations of our policyholders, such as unit-linked.
Okay, fantastic. And looking ahead, David, how do you see investment trends evolving in the next perhaps 5 to 10 years, especially when it comes to new technologies, innovations, or even shifts in global investment sentiment?
I definitely see there's a very clear shift away from the public markets towards the private. And I think this comes about from maybe two main reasons. One, we've seen increased volatility in the public equity space. And the second, I would say, is also in terms of the corporate lending. Mm-hmm. Companies have more choices now to borrow either from the public markets or from the private markets. Now, are we going to shift everything to private? The answer is no, because it comes with a certain trade-off of illiquidity, higher costs investing into the private markets, wider dispersion among the managers. So ultimately, I think it's only good for our investments to be able to look at more opportunities broadly across both public and private.
Okay, any last word before we let you go?
No, I would say looking at how this year has started, definitely we're in for a very exciting and potentially volatile period. As we have shared with many people earlier in the year, I think this period of geopolitical uncertainty, the best is always to look back at your own investments, ensure diversification, and to better navigate through this market cycle.
Thank you very much, David, for sharing those insights on these critical issues. It does seem like the future of the insurance industry is going to be shaped by smart investment strategies, and it's reassuring to know that insurers like Income Insurance are staying ahead of the curve. Appreciate your time with us this afternoon.
Thank you, Linley. My pleasure.
He is David Chua, Chief Investment Officer at Income Insurance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.